Good evening, all of you. In the last class, I told you about the income tax, the introduction part. Now, I'm going to take into account the introduction part and some of the items I have to tell, because all the people, they are anxiously waiting for this. What are the different objectives of taxation? You see, we are introducing tax, no doubt. Okay, and in the whole country, there must be one tax according to our Prime Minister Narendra Modi. So when we are going for that, and when you come across this tax, you have to take into account what are the main objectives of taxation, why we have to go for tax. The main objectives of taxation are mobilization of resources for economic development. You have to mobilize the resources for the sake of economic development. When you won't have any resources, automatically the economic development will be at the standstill position. So compulsory, you have to mobilize the resources. And taxation gives us that resource. Okay. It is nothing but a part and parcel, or it is nothing but an aid for this economic development. The second one is ensuring rapid pace of economic development. You see, when other countries, when they are developing in a fastest manner, why don't we? Okay, why our country won't develop? So when you want to see that, automatically you have to take into account this taxation. It is nothing but a tool. Okay, next, reduction in economic inequalities. Okay, when you take into account our country, the rich people, okay, they are very, very less in percentage. The middle class people, okay, a little bit less. And when you take into account the poor class the people, poor class community, they are very, very big. So when you come across these inequalities, automatically you won't come across any development, or you won't come across any growth. So this taxation, when you take into account and when you tax, okay, according to the incomes and according to the amounts received by the three communities, then automatically you can abolish and you can remove this inequalities between the three communities. Reduction of regional disparities by inducing the enterprises to start new industries in backward states or districts. You see, every person, they want to live in urban areas. When they want to live in urban areas, who is going to stay in rural areas? When every person, when they want to establish industries in rural areas or in metropolitan cities, who is going to start the business enterprises or the industries in rural areas where the resources are abundant? So this taxation, it induces that we have to start the industries, whatever it may be, in backward areas. Thereby, what is happening is those areas also, they will develop as a whole. The economic development, the whole economic development will develop. So for that, the taxation will help us. Maintenance of welfare state. You see, only wealth is not the criteria, please. Okay, we have to take into account the welfare state. Okay, every person, when they anchor about money, okay, they have to look after their health. So welfare of the state is also very, very important. So this taxation, whatever it was collected by the government people, they are using for the welfare of the state. Directing the consumption pattern as per the priorities of the government. Okay, directing the consumption pattern as per the priorities of the government. Priorities: agriculture sector, business sector, industry sector, like that we are coming across. So first priority must be given to the agriculture sector. When Every person, when they are not going to pay the tax amount to the government, from where the government will bring the money, and how will they help the agriculture sector, after that the business sector, after that the industrial sector, how they will do that? They cannot. And they are not having any Alauddin lamp. Whatever it may be, the tax that we are paying to the government, from that they are going to take into account the development of the priority sectors, that is agriculture sector, business sector, or industrial sector, whatever it may be. Don't be of the opinion that all the people are the big business magnates. There are some people who are starting small industries, and these industries, they must be looked after. If they won't look after, okay, there won't be any development. Okay, so that is the thing that we come across. To induce saving habit in the citizens, to induce, that is to inculcate or to make saving habit among the citizens. Okay, when there is a saving, automatically people, what they will do is, array, we are having some money, we are saving some money. Out of that, it is our customary duty to pay some amount to the government people. Thereby, the government people also, in turn, they will help us, not only us, but other people also, they will help us. They will help. Like that, people, they will think. So that thinking, if you want to bring, there should be taxation. Encouraging investment in priority sectors, agriculture sector, business sector. Okay, so encouragement, when we give encouragement, okay, when we give encouragement in investment attitudes or investment measures, automatically the priority sectors, they will become. Okay, don't be of that opinion that no person is an intellectual person. Every person in one sector, in one way or other way, they are intellectual people. And some are interested on studies, and some are interested on business activities, and some are interested on industries. But some other people, they are interested in other sectors. So this thing, encouragement, should be given for the investment of this priority sectors. Helping capital formation. This taxation, it will help capital formation. What is capital formation? Suppose if a person is having 100 rupees, if the government is having 100 rupees, and if one person, if he pay 50 rupees, automatically the amount will increase. The capital amount which the government, whether it may be state government or central government, whatever it may be, it is a helpful hand for the capital formation, for the increase of capital formation for the government. And protecting domestic industry entities from competition of foreign industries. Yes, you see, we have to protect our domestic industries. Nowadays, people, what they are doing is they are anchoring for foreign industries and foreign products. Okay, and the Indian government people, they have done a good thing in this pandemic situation. What they have done is they banned this China products completely. So thereby, what they have done is they have given chance for the domestic companies to prove themselves. That is Make in India. When we come across Make in India, automatically the industries, they will struggle hard. Okay, don't be of that opinion that Chinese people only, the intellectual people. Our Indian people also, they are better than those people. If they think that we have to do, they'll do miracles. Even Chinese people, they have to bow down their heads. So this taxation is nothing but one type of assistance or protective body for the domestic industries from foreign competition. So like this, you will come across the objectives of taxation. Now, taking into account, the constitutional provisions of taxation. Article 246(1), 246(2), 246(3), 246(4) Okay, these are nothing but the constitutional provisions. And these things, they will make this taxation. They'll they'll give some provisions for this taxation, that this thing, it should be done. And this thing, the articles in the constitution, okay, they are providing the taxation, or they are giving a power to the parliament and other legislative bodies to enact this tax, to enact this tax. That is, you have to enact, you have to bring that, thereby, according to the constitution, according to the constitutional articles and rules, you have to charge the tax. Okay, you should not be like a, okay, yardstick. You have to approach, you have to help them. Okay, don't be of that opinion that the constitution is acting as a Hitler. Okay, it was giving some provisions for the government people to enact the taxation through parliament and legislative as bodies, to bring this tax amount, or to bring this tax to the citizens of India, and to explain them, give them some privileges, and thereby see that those people, they also should pay the tax. These are the various provisions that we come across when we go for constitution. Okay, Indian constitution. Now, after that, we are having distribution, distribution of revenue. So article 268 and article 272 of the constitution, it distributes the revenue. Revenue is nothing but the income place. Okay, okay, article 268 provides for duties which are levied by the union but collected and appropriated by the states. Article 269 provides for the taxes which are levied and collected by the union but assigned to the states. Article 270 provides for the distribution between the union and the states of taxes levied and collected by the union on income other than agriculture income. Okay. Article 271 empowers the central government to levy surcharge on certain duties and taxes for the purposes of the union. Article 272 provides for the taxes which are levied and collected by the union to be distributed between the union and the states. These are the various, okay, or articles starting from 268 to 272. And these articles, okay, they are helpful for the union government as well as the states, whatever it may be, the number of states. So like this, you'll come across the distribution of revenue. Now, Indian taxation system. When we go for Indian taxation system, okay, we are having two types of taxes: direct tax and indirect tax. Direct tax, okay, directly it is collected from the public, from the people, from the persons. Okay, for example, income tax, wealth tax, all these things are nothing but the direct taxes. And these direct taxes, okay, they are controlled by one body, and that body is CBDT, Central Board of Direct Taxes. Central Board of Direct Taxes. According to the instructions of Central Board of Direct Taxes, this direct tax, it should be collected from the persons. That is, from the individual person's incomes, it should be collected. Okay, indirect taxes. The word itself, it tells us that the customer, he indirectly has to pay. That is, the manufacturer, he will pay tax to the government, and from the distributor, he will collect the money in order to fill up this gap. And the distributor, he will collect the money from the wholesaler, and from the wholesaler, from the retailer, he will collect the tax, and ultimately the retailer, he will collect from the customer. So indirectly, who is bearing the burden? The customer is bearing the burden. So it is nothing but an indirect tax. And what are the examples of this? Okay, sales tax, customs duty, excise duty, all these things are nothing but the examples of indirect tax. Okay, direct taxes and indirect taxes. Okay, and now I had given you an example that income tax is a direct tax. And when you go for indirect tax, GST, goods service tax, central excise duty or petroleum products customs duty, state excise duty on certain items, securities transaction tax. All these things are nothing but the indirect taxes that we come across. And direct taxes versus indirect taxes. Okay, I already told you that direct taxes are the taxes collected directly from the incomes of the individual persons. Indirect taxes are not like that. After sale of the goods and services, they will be collected from one person to one person, from one person to one person, from one person to another person. And ultimate person is the customer, because he has to bear everything. He has to pay tax to the retailer, retailer has to pay the tax to the wholesaler, wholesaler has to pay the tax to the distributor, and distributor has to pay the tax to the manufacturer. So whatever it may be the chain, whatever it may be the channel of distribution, ultimate person who is suffering is the customer or consumer. So this thing, after getting the goods and services, this tax will be levied. When you go for direct taxes, whatever it may be the income that was earned by a person, the income tax people, they will collect that from that person. Suppose if you take into account, for example, if you take into account, okay, a software person, he will get good amount of salary, but don't be of that opinion that he will take home that complete salary. He has to pay certain amount of tax to the government. They will deduct the tax and remaining amount only they will give to the person. So there he is paying the tax. That is nothing but an indirect, the direct tax on whatever it may be the income that he is getting. He has to pay some amount to the government in the form of tax. That is a direct tax. Suppose when you want to purchase a commodity, say for example, a Colgate toothpaste. Okay, a Colgate toothpaste. The manufacturing price, it is one thing. That is, the listed price is something. But the ultimate price is something. The customer has to pay, say for example, 50 rupees or 60 rupees for purchase of a toothpaste, Colgate toothpaste. But actually, it is not like that. It is not like that. And the manufacturer is not manufacturing only one toothpaste. He will manufacture a number of toothpastes, number of sachets. So whatever it may be the tax, when he distribute on all the commodities, automatically the tax per unit, it will be very, very less. But thing is, when it is coming from the manufacturer to the ultimate consumer, that the amount it is increasing, the tax amount is increasing, because all the people there, they want to fill up the gaps. And the ultimate person who is suffering is the consumer. He has to pay 50 rupees. In that 50 rupees, some amount will go for customs duty, some amount will go for profit, and the remaining amount is nothing but the tax. And the person, what he is doing is, he is not counting that. He is not looking after that. Array, I purchased the toothpaste, I paid 50 rupees. Okay, fine. From tomorrow onwards, we have to use this. But how much tax I am paying, how much profit is getting, all this analysis the consumer is not doing. Okay, he's just going like a flock of sheep. So this is nothing but one type of burden for the consumer. So now coming to the differences between the indirect tax and the direct tax. Direct tax is a tax when the incidence as well as impact of tax is on the same person. The tax is borne by the SSE. That is, who is SSE, sir? The person who is going to pay the taxes. Okay, we'll call him as SSE. It is not passed on to the consumer or customer. Example, income tax. Indirect tax is a tax where the incidence is on the SSE, but the impact is on the customer or consumer. The SSE possesses on the tax to the consumer, that is excess duty. You'll come across two types of excess duty: central excess duty and state excess duty. We have to, if you purchase any commodity within the state, we have to pay excess duty to the state government. And on these, all taking into account all the products, the state government, it has to pay some amount to the central government. So all these things, they are coming from the consumer. They are imposed on persons. See the peculiarity. They are imposed on persons, particular person. It is not on every person, please. On a particular person, it was imposed. They are imposed on goods and services, indirect taxes. Okay, they are not looking after the person's place. They are taking into account the goods and services. Sir, can you please explain me about the services? Yes, there is an example. If you go for an hotel, okay, you will order the food and the food will come, and after that the bill will come. And when you see the bill, you'll come across 4% tax. What is that? Service tax. That is, the person has to pay the amount for the food, whatever he has consumed, extra 4%. Not only that, tip to the waiter. Is it essential? Is it essential? I don't think so that it is very, very essential. Why you are giving tip to a waiter? What services he had done? He brought that. It is his duty. For that, he is getting a salary. There is no necessity for us to pay any paisa to the waiter as tip. But thing is, like a flock of sheep people, if one person, if he is giving, we have to give. And the waiters, they are living on their tips. He'll keep his salary in the bank. And people, they don't know that he is earning more than you. Next, amount of tax is determined directly on the basis of taxable income or wealth of the SSE. Okay, what is the income that a person is getting? On that only the tax will be levied, indirect taxes. Or what is the wealth that a person is having, whether they have wealth is increased or decreased, they'll look after, and on that only they'll tax. This is not like that. The indirect tax, it is not like that. The amount of tax or duty is determined indirectly. We don't know that. Indirectly. Directly, it is not known. Tax collection is difficult in income tax, and the tax collection is relatively easier. It is relatively easier. Yeah, because this person, okay, day and night he'll struggle. He'll shed his sweat and he will earn money. So when they're taking, automatically that hot feeling will come across for a person. I earned the money. Why should I pay? These people, they're coming and they're dragging my money like that. So tax collection is very, very difficult when you go for income tax. But when you go for indirect tax, you have to pay. Then only you are going to get the product. Otherwise, you are not going to get the product. So what people will do? They will oblige. They'll give. Let it be. Let this headache must go. Like that, they will give. So automatically, the tax collection is very, very easy for those people. Not all the persons are affected by direct taxes. That is the benefit. Don't be of that opinion that all the people will be affected by direct tax. Some people only, they will be affected. But when you go for indirect tax, all the people without any exception, bear indirect taxes. Even an auto driver who does not have any income more than the exempted limit should pay the excess duty if he purchases any toothpaste. See the peculiarity. Even a small auto driver whose income is not above the exemption limit, whose income is below the exemption limit per annum, but he has to pay the tax, indirect tax, when he wants to purchase a toothpaste. These are the differences that we come across between direct tax and indirect tax. Features of income tax in India. Okay, what are the features? Lived as per constitution. Okay, we are having a constitution, and according to the constitution, they will keep the taxes, direct tax or income tax. Lived by central government. The second person is central government because they must get the income, no? That's why. Okay, lived by central government. Direct tax, annual tax, tax on person. Okay, so next, tax on income. Income of previous year is assessable in assessment year. Charge at prescribed rates. Okay, charge at prescribed rates means slab rates. Okay, when you take into account slab rates, when you come across long-term capital gain, 20% slab. Okay, tax on long-term capital gain, 20% according to section 112. Tax on short-term capital gain on shares covered under STT at 15%, section 11, section 111A. Tax on lottery income, 30%, section 115BB. These are all nothing but the slab rates, that is fixed. They won't change. Whomever they get long-term the capital gain, they must pay 20% tax. Administered by the central government. Administered, this is looked after by central government place. And applicability. Income tax is applicable throughout India, including the state of Jammu and Kashmir. Previously, Jammu and Kashmir, it is not having this tax burden. It was not taken into account. But now, okay, at present, even the states of Jammu and Kashmir, they have to pay the direct tax. Okay, history of income tax in India. Okay, see, it came from Britishers. It came from Britishers. In 1860, the British rulers, they have taken this, taking into account the 1857 mutiny. Okay, there the amount, it is not there in their treasuries. So they used to collect tax from the public for everything. If you want to cut the trees, you have to pay the tax. If you want to sow the plants, you have to pay the tax. If you want to do agriculture, you have to pay the tax, because there is no income for the British government people, because taking into account the mutiny of 1857. The period between 1860 to 1886 was a period of experiments in the context of income tax. This period ended in 1886 when first income tax came into existence. The pattern laid down in it for living tax continues to operate even today through in some changed forms. Yeah, reformation. Okay, whatever it may be, the tax that they lived, by getting some reforms, it is up to now till today. In 1918, another act, Income Tax Act of 1918, came into existence. Okay, was passed, but it was short-lived and was replaced by Income Tax Act of 1922. And it remained in existence and operation till 31st March 1961. And in the year 1961, a new act came into existence, that is after independence. So what is this, sir? Okay, we got independence in 1947. And whatever it may be, the rupee, okay, whatever it may be, the money that we are having, we spent on ammunition. So thereby, after getting independence, no money. So they recognized, and they started keeping the taxes. Okay, keeping the taxes. That is, we are just acting as a Xerox copy for Britisher people. Whatever may be the tax that they kept, we are following. And since years together, this is continuing. Since years together, they are continuing. Because there is no money in the treasury. So we have to get money. How we will get money? If we ask any person, tell me they won't give liberally. So we have to get money. How? By imposing taxes. So Income Tax Act of 1961, with some amendments, it came into existence. And this Income Tax Act, it is having 298 sections. 298 sections and so many subsections. Okay, so many subsections. And after this, we are having this Income Tax Rules Act 1962. Okay. And what are the examples of these rules? Valuation of perquisites for calculating salary income, prescribed authority for expenditure on scientific research, splitting up of partly agricultural income and partly non-agricultural income. Okay, cases and circumstances in which payment exceeding 20,000 rupees may be made either by a check or a demand draft. It should not be done by cash. So these are the various rules that we come across. And Annual Finance Act, Yearly Finance Act. Basing upon the Finance Act, okay, the tax burden will be, and the tax rules will change. So don't be of that opinion that this tax, it is standard and fixed. It is nothing but an oscillating one according to the financial budget, according to the financial act that we come across. This income tax will change. Whatever it may be, the rules that were there, they will immediately they'll change. So like this, you'll come across. And tomorrow we are going to continue the remaining part. Okay. Thank you.